This conference will now be recorded.
Good morning, all. This is Barry Hemsey. It's Tuesday, July 27th, 2021. It's about 9 a.m. I'm running a tad late. This is a morning brief, but let's go through our routine quickly. We do very, very quick, for those of you new with us, housekeeping rules. I have nothing to report other than I have a major announcement for you later on in the go-to meeting, DMZ ATR chat room. It has to do with our happy expert. Very good news. A lot of work ahead. So we'll get to that. Where are we calendar-wise? Let's go there. Economic calendar tells us that we're on the second week. We're in the last week of July. And as Admiral mentioned back in his July 18 webinar, that Sunday night that we all gathered together, he called this week as a tough week to be careful about. Why? You got a trifecta. You got earnings, you got economic data that's heavy, GDP. I think, do you have durable goods? Yeah, durable goods today actually came out earlier. We're going to show you right here, and we have ECI at the end of the week. We have GDP, of course. Jobless claims is every Thursday, so there is quite a bit going on. Trade is tomorrow. I'm not too crazy about inventories, but okay, good. Durable goods are actually, oh shoot. Oh, Murray, it missed. Okay, Murray, it missed. Okay, yeah, big time. That's a big miss. Yeah, 2.1 versus 8. Yeah. X transportation 0.8 versus 3. Oh, and now capital goods were up. Interesting. Okay. So we have a calendar, a pretty decent econ calendar ahead. Now, not to forget, and not to the lead, and probably the best is kept for last is you got to do a FOMC meeting today and tomorrow. So today could be after this durable good is out of the way, which it is now. You got Case-Shiller should be coming out any second. I'm sorry. Then we have consumer confidence. And I don't care about Richmond Fed that much, but consumer confidence is good, key. And let's take a look at Case-Shiller. That should be coming out shortly. I don't think it's going to update that fast. This is economy data, a little bit off. Okay, up 16% versus a year ago. That's on Comedy Central, aka CNBC. Okay, we call them Comedy Central. Just a new cast of characters. All right. So they haven't reported this, but up 16%. Okay. Are we nearing peak America? Who knows? We've been here before. And we're still going to go forward. There's resilience. There's ingenuity. There is fresh blood. There is, desire for material consumption that drives people. Okay. If you're driving a Jag, you're not going to sell for a Volkswagen. You're going to go harder. Next one could be a Bentley. Move forward. Think positive. Move forward. But be realistic. All right. So now that's why also it's quiet period here with the Fed guys. No talking. The first one is going to talk is tomorrow at 2:30. There's going to be an announcement written, but the first talking person would be our venerable Fed Chair Jerome Powell. All right. So I'm not making fun of him. I should expect the guy. I think he came out better, equal or better than Reverend Yankee in face of severe dislocation. Bullard is going to talk on Friday. That's one of my characters. He's a little dove. I've had that issue with him, but here's what it is. And then Brainerd is yelling as Peter Cook, our learned colleague and moderator for the OTF chat room, said yesterday he's a Yellen protege out of San Francisco Fed, and now is a board governor. We keep actually a list of who's where and what they're doing. Some of it is revolving doors, but you need to keep an eye with their perspective, why they're doing what they do. Bullard is from San Luis. He and Charlie Evans are buddies. Charlie Evans is for Chicago Fed. All right. So that's the calendar with this. Next week we're gonna have what? Non-farm payroll. Hallelujah! It's gonna be pretty decent fireworks. Jack, welcome, sir. Jeff, welcome, sir. Okay. So moving forward, let's get to some charts as we always do. Housekeeping, econ calendar, PMT, and then overnight. We're gonna keep it small, short. 9:03 right now. Okay. Oh, the announcement I'm gonna have, it has to do with some stuff here, but not now. Tomorrow. Okay. Yeah. I mean today later. Okay. We keep on going higher. Okay. What else is new? Well, part of it is free cash coming in. They're throwing so much cash here, and I think what we're gonna find out today that this is my guess. I have no inside info. That tapering is not here. That will create a shock that this fragile economy cannot withstand. From what I read from people I talk to, yeah, that's what I get. I'm getting new highs. You noted here by this color, that's golden rod, that's rising. Okay, we covered here. We missed this move. I thought we are gonna probably peter out here and then roll down. I was wrong, but not the point to get long. And shorting has not worked. So I said I'm going to take a pause. We took a several days pause. Remember, I was in a very bad spot for several weeks, and it really impacted my trading and all that. So I just needed a little pause. Markets will always be there. I had these issues before. Okay. And I don't need to talk about my record. My record speaks for itself. If you look at time and digest, you'll see. These things come and go, but you just have to get back on the horse. All I know is this: we're at record highs and indicators are not. Okay, it's actually tipping down. So that same thing with Brett Trust. This is McClellan oscillator. Fairly neutral or negative, slightly. Okay, this is neutral. This is slightly negative. It's not in the territory it would warn me, but CIs are up. CIs are up, and of course this we're updating. We're doing completely new. We haven't imported here yet. I'll give you a little sneak preview. Here's up and down volume. This is from Lowry's report. I got it programmed with the help of Bo. Wish I'd done it one day before. Why? Look at that. Look at this reading right there. I went to lunch with him on Tuesday, last Tuesday. Should have gone Monday. Look at that read. And then we went. Now, did not finish coding until the following day. There were some bugs in it. There were some issues. Yeah, so we've been trying for several weeks to go have lunch. Okay. Now, if you look at the following day, there are two events here. Hold on. Let me open this up so it's a little bit better. Okay, so line number. Let me draw a line for you. Okay, so this is last Monday. Okay, look at what happened on Tuesday. He went from an extreme down, -90, to +90 the following day. This event, it doesn't happen often. We just don't do that. It gets close, but never crosses that like that. Okay, and so as sentiment trader, my dear friend Jeff Corporate, Jeffrey, I'm saying, not Jeff. I'm thinking of another mutual friend in Madison, Wisconsin. No, I'm talking about Jason Gopher. Yeah. I was thinking of another gentleman. His first time such Jeffrey. All right. So if you look at that, you'll see that he had a white paper that published that said 6 months forward, market is very, very high from here. When you have an event like that, these two, that has never failed in the past. We'll see. I think we have a lot of challenges in front of us in all areas. We shall see. So that's timing. Moving forward, this is canaries in the coal mine. Basically, we're trying to focus on transportation and Russell. A better way of looking at it is a detrender. And you got to stop and ask yourself, why are we doing an all-time high and these guys aren't? They're not even above 50-day. Okay. So both the indices, the major indices, the SPX and the XR, but the relevant little sisters, the Russell for NDX and the transportation for SPX. Historically, they've always gone together. They confirmed each other. When they didn't, we had issue. Okay. All those things being, all other things being equal, this is an alarm right now. Not a big one. It's not selling off, but it's not keeping up either. Okay. So be true to the data. and don't put your own bias in. Okay, we went long last night on the model. This is the weekly, no, sorry, daily timing model. Very mechanical, very simple. It's trend following. Okay. Excuse me. Now, keep in mind, SPX has been long for a long time on the weekly. Why? It hasn't had the volatility daily has. Daily, so look at detail, you'll see up, down, up, down. There's a lot going on. Now, sometimes it's also getting inverted. It'll sell on the bottom and buy at the top. Why? Trend following. That's the nature of the beast. So how do you protect yourself there? It stops. That's what we do in the NQ. Same thing, same rules. Okay. Now, this is the alarm. It has not gone away. High reading of 52 weeks high. Typically, that marks the beginning of a hi Andrew, welcome. Typically, that marks the issue of that the top is in formation, but we can go on for a while. I remember, oh geez, in 2008, and this is not saying this is 2008, but that's the year it comes to my mind. This peak at May 16th, market didn't unravel until late July. So, and then start, slowly coming down, and then boom, exploded or imploded, I should say, by September 15th. So this is not 2008, no way. But the banks are totally different condition. But we have a lot of challenges, and we have dealing with people who are very stubborn, and also we're dealing with some undereducated people. Our problem is COVID, unvaccinated. Anybody with any education could not go and do that. This is a public health issue. It's not a personal freedom or ideological issue. It's public health policy. Yeah, we're not getting into that, but I'm just saying that's what's causing this nervousness out here. Every time we've had a drop, has to do with COVID. And COVID stocks are higher. Look at the XRT. All right. Volatility. We talk about this often, and there's a reason. This is the toughest input into a Black-Scholes model. Yeah, the two most critical inputs. One is X minus S, which is current price versus a strike. Whether you're above it or below it is call or put. Those four conditions you look at, it tells you what that is. That's a good input. But the next one is volatility, especially if those two are sideways. Okay, so volatility becomes an issue that usually go together. You can't have a sideways market with high volatility. It usually doesn't happen like that. But so if the X minus S doesn't change, volatility should drop. But the toughest one to measure and input is volatility. And we measure that against itself using sigma channels. So it's vol of the vols, if you will. Okay. Thanks. So here's our sigma levels. We're at +1. Yeah, you can't be at all-time high and be at +1. And your readings at 18, 19. Something is wrong here. This is not normal. Or maybe I'm a little jittery up here because we're so high up. Okay. Evaluations are huge, huge, huge. Everything is up. Houses, gas, food, everything is so. These usually don't end well, but we'll find out. In the meantime, your job isn't to pontificate. Your job is to make money. Just print the damn cash, okay? Legally, exactly. How? Well, that's what we do here. SQ drop down. What is this? Tail risk, put options, SPX, big guns. Mom and pop are not going to buy SPX. They don't have the cash. And these are other money. So they're up down here somewhere. This is computed. You cannot trade this. This is computed once a day at the end of the day. It's ticking down. We're going up. That's normal. This was unusual. We're going up and it's upticking. That's a little bit too much. Okay. No, I'm sorry. I'm inverted. More coffee. Sorry. By the way, this is being recorded, but I'm not going to edit this out. There's no editing. There's no time. No, it should be. It should be natural as it is. We're human. We make mistakes. This was fine. We're going up and more bets are coming in. This says there are more bets down below here. Looks like yesterday they took some off. Okay. This is deep out of the money SPX puts only. We don't do both tail risk. It's the put, the lower tail risk. If you think of the price, you have a bell curve here. Okay. It's small, it gets fat and gets thin. This deals with this part. Okay. If you think of it as volume profile, yeah, This is way out of where the range was for today. So, especially not where you are trading now, but maybe on a historical, 1 week, 2 week look back. Not an expert on market profile, but I've been student of those people like FT71. We're very good at to learn from. And that's why I created OTF. OTF is from their terms actually, but when you leave the bell curve, OTF takes over. Means what? Directional. OTF is sausage. Back and forth, okay? Which is very good. You can make some money. So when things go quiet or sideways, that's the only way to be. But if it breaks out, like we have been breaking up, both up or down, then OTF comes in with flying colors. Is it easy to learn? No. You gotta spend some time. Yeah. As I mentioned yesterday to Tatiana, think of a brain surgeon. And you just finished medical school. You're a doctor, right? Yeah, sure. As that lady says, can I call you a doctor? She was trying to date this guy, wanted to make sure a doctor. She's on the arm of a doctor. Listen, that's what's beginning your problems if you want to be a brain surgeon. Probably another 5-10 years getting to be experienced and have expertise. Welcome to my world. So, and we've always said we're not for the new beginners, not for novice. You're gonna get washed out. Trading is like what is tied into what you put in. If you're not willing to put in much, you just want it easy. I think I have a better solution for you. Try Uber, because you're gonna blow up your account. Remember, it's like sitting at a table in Vegas. Not advisable unless you have an edge and you can execute the edge. Otherwise, sooner or later you're gonna shoot yourself. Pretty bad. I mean, that'd be your feet. Okay, this is trend. I'm not a big deal about it. I'm not crazy about it. This is giving you a sell, that's giving you a buy. I don't know. It's earnings. I never liked trend, but we still have it. TD, let's go here. Okay, overbought. Almost. We're edging into overbought 75. We gotta watch that. I should have gone longer. I know that. I was just, it was like a relief crush, just because of my short. Get me out of there. Okay, I didn't think about, hey, this could be a rubber band, but remember, no rendezvous here with the stock car side. You see that? They usually rendezvous from high to low. It's turning around already. So what? Very strong push up. At 2.53, now this is a spread. This is a VIX futures, the spread 3 months. So we're running, here we go. We're running long August, short November. Okay, we just finished July. We're in August, so we had to roll it over. It was July long, short October. Now we're long August, short November. Okay, and that stands at 2.53. This is live chart. This is trading right now. You could see the term structure of the VIX, including the traffic. Now, at 2.53, what does it mean? Near zero, that's the bottom. The lower this get, the higher we are market-wise. So this is kind of a better than neutral. Okay, better than neutral. That's a little bit upside activity, but you can see the term structure. And it's tied into ES because this is live. That has to be live, and it's an S&P. So this is it. And this spread has worked really, really well. There's an article for me. I don't know where it is. I have to call SIBO. Hold on, let me write this down. I've been saying I gotta call them. SIBO blog. I want to see what they relocated. Because it would be a shame. There's a lot, not just my stuff. I'm nobody. There's a bunch of other people like Larry McMillan. Those are some great readings on option. They should have that blog back up. The gal who was there got into some politics. I didn't like her much either, and she was playing hardball with a bunch of people, not just me, but other contributors. I think she's this. Okay. Oh, by the way, this I want to show you, Gary. Remember you were telling me how look back is? This is the SPY hourly. That's why I said to proactive market timing. Hourly chart of a SPY versus the weekly support and resistance computed from the prior week action. So this is these levels are based on last week. Look how we exploded. Look how we went from a small vol, difference between these bars versus here. So We're coming. What are we gonna get? We're gonna be quiet. Why? Volatility cycles are more predictable than price cycles. We're going to low vol to high vol. Next one is gonna be low vol. So how do we get to low vol? This week has to be low vol. Remember, it's based on prior week. Same thing we do on a daily charts like this. Hold on, let me go to NQ. This is what I show you guys. I'm using multiple screens here. In the NQ room, NQ chat room with the DMC. Again, hold on, quickly, just so you know. Boom, boom. Okay, 5 minute, and these are IB levels. This has nothing to do with support resistance. It's a different kind of levels, but the classical support resistance comes here. I'm running a 10 minute on the daily, and then hourly chart. The bar is hourly. Okay, this bar is hourly, but the computation is weekly. Tracing was the first platform that allowed you to do that without running some crazy code. Now, they're very good in their indices. It's one of their indices that gives you the weekly high and low and close, or actually open high, low and close, or prior week on any name. Yeah, they do that. Yeah, so interesting. So I just found out also one of the things I'm working on with Peter is this Lowry's buying power. And these are inputs to that. They're very complex to keep track of. Guess what? Who does it? TradeStation has it in-house. It's just incredible. By just putting two inputs in, that gives us. This is a classical system for various markets, ES, mid-cap, Russell, and NQ. NQ has been long from here. And, it was very primitive what I looked at, what Peter sent me. Obviously, we have modified it quite a bit to get into robustness, including long and short, get the chart better presented, and put it, just Bollinger Bands on it, nothing fancy. I don't want to put too much Sigma stuff on it. Just have some clarity of a fair value, excessive high, or excessive low, right? But that's working. That's work in progress. It's taking some of my attention, but that's how I live. I live by doing new stuff. You're just getting involved in research and so forth. Again, I've been posting this a little bit at a time, every day on the couple of times a day on the Twitter. Make sure you follow me. My Twitter is @MZ Analytics, and it's an eclectic group of items there. And that's how it's grown. Yeah, it's grown to about 140,000 people. Just very eclectic. Let's see, not there. Internals, no. Those we don't need. Okay. Let me go to one more chart. What time is it? 9:20. We got to hustle. Okay. This is a chart that's important. Let me go build this up a little bit more. That's 125. Okay, fine. All right. So we dropped dramatically. I had warned you, if you read volume market proactive market timing, that there's nothing new, by the way. There's nothing new. I'm being a parrot. I'm repeating myself because this pattern is true. This indicator can go in a divergence mode against your cash position, the cash index for a long time, Okay, and then it breaks. And look at see high, couple of new highs, another high, but not keeping up with the rate of change of SPX. When that rate of change diverge, you're gonna have a problem when you start. Now 1 to 80 was not much of a wash, so it says there's a bid. Why? We're flooding the market with almost free money. So what do you expect? James, how are you, sir? Or Jim, I should say. Jim. We're almost done here, but it's being recorded. And it'll be posted shortly, but not too fast. Okay. What else do I have for you? Okay. Overnight. Let's go overnight quickly. Hold on. Again, I have a major announcement to make in the NQ Zoom room. Not Zoom, I'm saying NQ DMZ room. Not here. This is a different go-to meeting. About 10:30ish when I was there. All good news, but there's a major update that needs to go out, and I'll just explain that there. Okay, overnight, we dropped about 3:30, this is London opens right there, because I believe it's 3 our time when London opens now. There's a, savings time issue. It used to be 4, now it's 3, I think it'll revert again at the end of the summer. And then they bought it back, and they bought it here, we're down about 9. At one point, I thought I saw 27 down, if I'm right. 43.90, that is 14 more, so 23. Okay, yeah, I'm wrong by 27, 23. So it was, at this point, we were 23 points down. Why? I saw it in the morning, I just checked it in my phone. And then here's your NQ, down 11, but most important, look at percentages, okay? Nothing. It should be suspended animation today, going into tomorrow's Fed. The only thing that's gonna move us between now and 2 p.m. tomorrow is the econ calendar, but we went over that. Any questions for me? 9:24. I think we need to go set up the other room, get you guys back in there. Okay? I think the room is set up. I don't think, let me see. Yeah, we just need to get in. Hold on. Let me say that before I discontinue the audio. 1 second. Huh? Murray, what are you doing to me? Hold on. There you go. Yeah, okay. No, I need to set up the room. Okay. Let me close this room. Okay, and then we'll get you in the other room. Okay, guys. Hi, Noah. We're just closing it right now because we finished, but it's recorded. Okay. Let me go set up. So we'll see you on the other side. We'll do this more often. Today I started a little bit late. I'm sorry, but I'll explain what was going on. So, all right, let me start the other room. So see you on the other side, guys. There we go.